makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. U.S. stocks powered to another record, but a rally in treasuries takes a pause as traders await a double whammy of U.S. inflation and a Fed decision. The French President Emmanuel Macron is set to address the public in the next hour after his shock decision to dissolve Parliament rattled the markets. Plus, the EU is actually set to notify Beijing today of tariffs on Chinese EV makers, while companies could face additional levies of around 25%. So good morning, everyone. We have this double whammy, not only CPI, but also the Fed. So it's going to be a busy market day. Now, the picture overall is one of calm, certainly of relative calm to what we saw in the last couple of days. The market's really being taken by surprise, more by the dissolution of Parliament of the French president than the rise of the far right, certainly when it comes to European elections. Now, the CAC 40 gaining some 0.5%. You see the FTSE gaining 0.7%. We saw quite a lot of volatility, I would say, Monday and Tuesday. Of course, in European assets, and that appears to be subsiding overall. Investors were caught unprepared. I know there's a lot of possible scenarios about what happens to politics in France, and then the calm, I keep on being told by people on the trading floor, could be short-lived because of this double whammy of U.S. CPI data and the Fed rate forecast potentially upending markets. There's no better day to speak to Grace Peters from JPMorgan, so that's coming up shortly. S&P futures, you can see practically unchanged, a little bit more calm, certainly than we were yesterday at the same time. The France 2-year 3.185, then the U.S. 10-year 4.4001. Then we're getting some breaking news out of the IEA saying that a major oil surplus has been seen, or they see it this decade as demand has been peaking. Now, remember, there have been a number of analyses on that front for the last couple of decades. So it's unclear to me and to a lot of market participants when we reach peak oil, but something to keep in mind. And you can see Brent crude and, of course, WTI getting some between 0.7 and 0.9%. So to talk about the Fed, to talk about CPI, let's get straight to Grace Peters, the global head of investment strategy at JPMorgan Private Bank. Grace, what a big day. I mean, if there's any market moving day, today is probably the one. Are we going to see, a lot of volatility on the back of CPI?
Yes. Hello. So nice to be here. As you say, what a day and what a week. We've just released our mid-year outlook called A Strong Economy in a Fragile World. And I think that actually perfectly epitomizes many of the dynamics we're seeing at play. In terms of CPI today and sort of your question around volatility, I mean, inflation is still absolutely one of the key metrics that we're looking to. And when we think to expectations for the Fed, I think it'll be, yes, obviously influenced by today's CPI print, but also we're expecting a new SEP from the Fed, new forecasts and a new dot plot. So I think there is going to be a lot to analyse. From my perspective, what I'm looking for when it comes to the FOMC and their reaction to most recent data, I think when we're not expecting any change to the near-term policy rate, but I think there will absolutely be a focus on where they think core PCE is headed. We think, if anything, they're going to increase their forecast to around 2.8% for the fourth quarter of this year. And obviously, on the dot plot, to me, there's two things. Firstly, how does that evolve? We know that it was 3 cuts this year they had priced, expected previously, just by a slim margin. So will it be 1? Will it be 2? If it's 2, I think you could actually see quite a positive market reaction. We've started to see, or we've continued to see, so to speak, new highs being made in the S&P, and I think that will further support that. That's certainly in line with our view. And then the other thing I'd look for from the FOMC is really that longer-term dot plot, their estimate of the neutral rate, which again has nudged up in recent forecast changes, and I think that will be the continued direction of travel.
So, Grace, as you say, today's also a big day because it's your mid-year outlook 2024, and a lot of market participants kind of wait for this to try and understand what the next 6 months, and it feels like it's just going to be a lot more volatile because of politics. But you're expecting a strong economy in a fragile world. I think that's the title of it. Does it mean that it could shift quite quickly?
No, so the outlook really is intended to recognise that we do think that there is economic strength, trend growth rates supported by strong corporates and strong household balance sheets as well. But the world has many fragilities, and that makes investing feel uncomfortable. And so a lot of the work that we're doing with clients at the moment is to say, look, our investment advice is to be fully invested. But the conversations around making sure your portfolio is resilient given those fragilities, is incredibly important. And so we do think that equities are going to be the growth driver. As part of our forecast changes, our price target for the S&P for mid-2025 is 5,700. So we've got a very healthy level of upside to the S&P over the next 12 months and other European equity markets, including Europe as well. But, you know, there are other assets that we should think about as well to reflect the tail risks that include recession and higher inflation, and a lot of that, you know, fixed income for recession, but alternative assets for us is a large focus as well.
And in your mid-year outlook, you also pick basically two main themes,
Yes.
which kind of goes to the heart of really everything that we're living day to day
Yes.
in our daily lives, but also in the markets, which is AI and security.
Yes.
So how do you play those thematically?
Yes, absolutely. So these are the two multi-year themes that will affect the next 12 months, but also the longer-term time horizon. When we're thinking about artificial intelligence, whilst it's been something that's been so discussed over the last 6 months or so, we think we're just getting started. And when we think about the percentage of companies using AI today, it's about 5%. And when we think about, you know, the companies in their most recent earnings report who's talking about using AI, that's 50%. So we think we're just at that inflection point. How do you play it? Well, it's through the value chain. Yes, it's large mega cap tech, but it's also thinking through data centers. It's thinking through the power needs. If we think about the new data centers, the AI data centers, they're likely to need 5 to 10 times the amount of power versus a traditional data center. And that obviously has implications for power generation, power transmission, power storage. So we think there's actually quite a large value chain to play. And then there's obviously every sector is going to be impacted by this. And so it brings us back to focusing on quality companies that have the balance sheets to make the investments, to get that first mover advantage, and obviously still distribute to shareholders at the same time.
So expensive companies.
Well, to some extent expensive. And I think this is part of where, in our outlook, perhaps we're more contrarian, because we actually are quite comfortable with company valuations in the large cap space when we're talking about these firm balance sheets. Because when you look at corporate margins in the US, you know, at the highs, and in Europe recovering very nicely, some may say that that's a fragility in itself. We think that's indicative of the way companies have done a fantastic job at actually being very efficient at converting, you know, the equity into cash flow for shareholders. So we feel more comfortable around large cap equity multiples, but we are avoiding unprofitable companies, over-leveraged companies, and so there is that split when we think about risk assets as to the ones we want to own and the ones we don't.
And Grace, so I mean, again, security is another big theme.
Yes.
That kind of encompasses geopolitics. It really has everything.
It
but
is.
What's the right way for investors to play on that?
Yes, and I mean, geopolitics, when we speak to our clients, and I think when, you know, investors are surveyed across the market, this is the number one risk. And again, just to reiterate what I mentioned before, we think that shouldn't prevent you from being invested. But I think that whilst history would say geopolitical events have a limited impact on markets, what I feel is that the definition of national security is undoubtedly changing, and that has implications for the way governments think as well as corporates. So supply chain security, energy security, and cyber security, linking back to AI, really important. When we think about investment opportunities, they're global, and they're in sectors like industrials, infrastructure assets, and also some materials.
And Grace, no matter I mean, are these two themes here longer term? So really, no matter what happens with CPI or Fed today, or even some of the volatility, this is basically a long-term investment.
These are long-term themes that absolutely form part of shaping portfolios today, but also that portfolio resilience as we think about building wealth over time.
Grace, thank you so much for joining us today. Of course, talk about Fed, we have CPI, and then the mid-year outlook for 2024 by Grace Peters, Global Head of Investment Strategy at JPMorgan Private Bank. Now, a couple of things that we need to show you. Of course, on the corporate side, Oracle reported better than expected bookings and announced partnership deals with tech rivals. The software maker focused on expanding its cloud infrastructure unit, which runs computing power and storage to compete with Amazon, Microsoft, and Google. Oracle, look at that, pre-market gaining 9%. Now, coming up, what higher for longer means for leveraged finance and private equity. We'll discuss this with Hoby Buvat, co-head of capital markets EMEA at Deutsche Bank. That's coming up next, and this is Bloomberg. Welcome back, everyone. Now, investors pouring cash into leveraged loans, making the risky asset class a star performer in credit markets. Now, it comes as a prospect of higher for longer monetary policy boosts the appeal of debt with a floating rate. Well, U.S. leveraged loans have become some of the biggest winners in this global fixed income this year, netting 4% for investors, topping the charts along with Asia-Pacific credit. That's according to data compiled by Bloomberg. Well, I'm delighted. I actually could not be more delighted to speak about all of this with Hoby Buvat, co-head of capital markets EMEA at Deutsche Bank, as a German lender holds its European Leveraged Finance Conference here in London. Hoby, thank you so much for joining us. I mean, there's so much going on, and actually I just want to know whether you're confident about the months and kind of quarters ahead. Is activity coming back? Is there pickup? Do you feel good about it?
Yes, thank you, Francine, and thank you for having me. Yes, we do feel good about the activity levels. I think, when you look at volumes in particular in European leveraged markets, year to date, we've already exceeded, all of 2023 volumes in leveraged loans. And high yield is also, doing the same in terms of, issuance volumes. Most of the issuance volumes have been for refinancings. Okay. So, I think what we are waiting for, is a bit of activity on the M&A side, so on the buyer side. But I would say so far, very good technicals. The investors are very keen to invest in those new issuances. And, there's really no reason to think that the technicals will change materially in the months ahead.
But so when you look at the market, it seems that there's a leveraged loan resurgence issuance in the U.S. this year. And actually market activity in Europe is a little bit slower. And I don't know whether you can pinpoint to the reasons or whether it's just a late laggard.
Yes. No, I mean, look, I think it's basically, first the stock of, of deals that we have. Yeah. In the U.S., they've actually already had, some large transactions also on the buyout front, which we have not really seen in Europe. So when you look at the, primary issuance and the use of proceeds, again, away from refinancing and corporates, sort of addressing the maturities, that they have to address, we do need some more buyout volumes. And in the U.S., being a larger market, we've seen more of them, and we've seen more larger transactions. In Europe, we are still yet to see those ones.
So a high-yield bond issuance in Europe has had a pretty strong start to the year, but overall the market is still shrinking. How does that trend develop?
Yes, and it's basically, shrinking because, again, we have, we have the use of proceeds is effectively refinancing existing, issuances. You also have, spreads have tightened quite a lot. So, if you're an issuer today, maybe you issue more loans because you get the spread tightening, and you can also then get the benefit of the rates. The base rates, decreasing over time, even if we all, acknowledge that it's not going to happen as quickly, as we first expected, maybe same time last year.
There's also been quite a lot of turmoil, right? We're thinking of like Altis, Ardag, Intrum, three of the biggest, biggest cap structures in European high yield. Has that affected investor sentiment? Are there going to be, more fallout from this?
Yes, so this is very good, a good point, Francine. I think. Overall, default rates are very low, right, across, I think, the markets, both in the US and Europe. We do have those pockets of stress, and they are very contained. I think that they affect companies that have been, very levered, and obviously, with interest costs going up, they have been, their cash flows have been more affected than for others. I would say generally it hasn't really affected investor appetite for, new issuance. But of course, I think, it means that investors have to work on their portfolios. And those, if you take those three, they actually represent quite a large, percentage of assets under management. And I would say every investor probably has some LTs and some ADA in their portfolios.
So, Hoby, talk to me a bit. We started by saying, actually, the IPO market is maybe the question mark. One, that deal making is picking up. When do you expect a resurgence of IPOs?
Yes, so IPOs, there have been already quite a few IPOs. Obviously, it's the market in recovery. I think in Europe, we've seen some large IPOs, Push, Douglas, CVC, Galderma. So, and when you look at the post, aftermarket performance of those IPOs, they've been quite, decent, I think, for the very large ones, which has been very good to see. But it is a market, is still in recovery. And I think that... I think people who look at IPO market, just take their time and sort of want to make sure that the story, is solid enough. Because I think for the good stories, there is appetite for equity investment as well.
What's the one thing, I know we talk about the capital markets union, there's been a lot of political turmoil. Would that make a meaningful difference to attracting capital to Europe or for kickstarting deal making and more IPOs?
I mean, that would make, obviously, I think, yes, is the answer. I do believe that. I think, at the end of the day, what we really need is more stability, more issuances, in the IPO market. Obviously, now we are in a heightened, I would say, political environment a little bit suddenly in Europe, given the past, sort of days. But overall, it seems like stability, volatility, has decreased, and we just need to see more of those IPOs, coming to market and performing well, I think.
Okay, private credit. I mean, talk to me about private credit. I mean, it's an enormous amount of money.
Yes.
And actually, it's kind of come not out of nowhere, but it's incredible how big it is in the last 5 to 10 years. What are the pros and cons of private credit compared, for example, to some of the syndicated capital markets?
Yes, and look, we compare private credit a lot to syndicated capital markets. I think we're going to move away from that and just talk about how do we converge, how do we combine, and how do those two sources of financing sort of work together for, just for the economy and for funding, the economy's needs. And the reason why I'm saying that is that, private credit has sort of started with replacing leverage lending at commercial banks, just after the GFC. And it's really moved away from that, to basically finance infrastructure assets, finance corporates, for their large investments. And I think we're going to head more and more towards that, because when you think about the massive capex requirements for the new economy, so digitization, just decarbonation, a lot of money will come from, of course, there will be government money, there will be public markets money, equity and debt, but there will be private money as well, be it private equity or private credit. So I do think that as a bank, and we are obviously already working quite, seriously on that, is we are going to be working together with the private credit providers to meet those needs for our, sort of core clients.
Hoby, thank you so much for joining us today. We need to do more of an update on this, maybe quarterly, if not almost monthly. Hoby Buvat, co-head of capital markets EMA at Deutsche Bank. Now, coming up, we'll also be hearing from the Greek Prime Minister, Kyriakos Mitsotakis, about the EU election results and, of course, the future of the European Commission President, Ursula von der Leyen. We're talking about some of the tumult in the markets since that election on Sunday. More from our exclusive interview next, and this is Bloomberg. Well, the Greek Prime Minister, Kyriakos Mitsotakis, has told Bloomberg that the political centre held in the European Parliament elections, dismissing concerns about an upswell of populism. While speaking exclusively to Tom McKenzie, Mitsotakis describes the success of far-right parties mainly isolated to France and Germany. He also added that he's convinced that Ursula von der Leyen will secure a second term as European Commission President.
I am absolutely convinced that Ursula von der Leyen is going to continue as Commission President. She is our Spitzenkandidat. We are by far the largest political family, and I think she will have the overwhelming, if not unanimous, support of the European Council, and she will manage to obtain a majority at the European Parliament.
Well, that was Greece's Prime Minister Kyriakos Mitsotakis speaking to us a little bit earlier on. Now, also making news, President Biden says he will respect the judicial process and not pardon his son Hunter, who has been convicted in Delaware of violating federal gun laws. A jury found Hunter was addicted to drugs when he bought a gun in 2018. Now, he becomes the first son of a sitting president to be convicted of a felony and faces another criminal trial on tax charges just 2 months before the presidential election. Now, Bloomberg has also learned that the Biden administration is considering further restrictions on China's access to chip technology used for AI. We're told Washington may move to limit Beijing's ability to use cutting-edge chip architecture known as Gate-All-Around, or GAA. Apple shares rose to a record after it announced long-awaited new AI offers, overtaking Nvidia as the second most valuable company in the world again. Now, Apple shares jumped more than 7% yesterday, their biggest one-day jump since November of 2022. Now, this is a picture for some of the French assets that certainly have been rocked around in the last couple of days. Now, the volatility that we saw in European assets for the moment appears to be subsiding. Investors were really rattled and caught unprepared for the French far-right's gains in the weekend's European Parliament. Calm could be short-lived. Let's have a look at the France 10-year at 3.206. It could be short-lived because of a double whammy of US CPI and, of course, the Fed decision. Coming up, we'll speak to the World Economics Forum's managing director on the latest efforts to close the gender pay gap. That's next, and this is Bloomberg. Now, U.S. stocks power to another record, but a rally in treasuries takes a pause as traders await a double whammy of U.S. inflation and, of course, the Fed decision. The French President Emmanuel Macron is set to address the public in the next half an hour after his shock decision to dissolve Parliament rattled the markets. Plus, the EU is set to notify Beijing today of tariffs on Chinese EV makers. Now, companies could face additional levies of around 25%. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the French President Emmanuel Macron will be holding a news conference within the next half an hour. It follows his decision to call a snap election that has really rattled the markets. Bloomberg's Caroline Conan joins us now from Paris. Caroline, great to speak to you. So where are we actually in terms of the potential outcome? What are the polls telling us? And why are the markets so worried?
In fact, the markets are going to watch very closely this press conference by Emmanuel Macron in half an hour to see whether he is going to manage to reassure, to take some of the heat out. Over the past couple of days, you've seen a sell-off on the French bond market. Clearly, what the market is really worried about at the moment is what happens if a national rally government comes into place after July 7? What does this mean in terms of French debt, French deficit? In 2022, during the last presidential elections, the cost of a potential Marine Le Pen victory was estimated to be more than 100 billion euros. If you look at the deficit last year in France, it was more than 150 billion euros. So clearly, there is a potential here for a new debt crisis, according to the current French finance minister himself, Bruno Le Maire, a potential least trust moment, least trust scenario. Now, Francine, I don't have to explain to you what a least trust scenario obviously could mean, but a lot will depend on the horse trading behind the scene, what kind of alliances Macron will seek, what kind of alliances the National Rally will get, and with the Republicans, some of the Republicans at least joining forces with the National Rally, that could actually be a bit of a concern and a game changer for the second round also of these legislative elections.
Yeah, I hear, Caroline, from a lot of chief executives that they also don't know 100% what the economic plan, right, of Le Pen's party is. They don't know who they would put, as finance minister if Jordan Bardella would become prime minister. But what are the polls saying in terms of what the outcome could be for the National Assembly?
So the polls at the moment are saying 35% for National Rally, 8% for Macron's party, but that's a two-round system. So again, a lot will depend on the horse trading, who supports who in the second round. Because of the two-round system, the two candidates who get the highest score in the first round, then they get to face each other in a duel for July 7 for the second round. Jordan Bardella, he is the one who would become prime minister if there is a majority of national rally at the National Assembly. He's 28 years old. He's been groomed as Marine Le Pen's heir because she's still eyeing the bigger prize, which is becoming president in 2027. Yes, the economic program is pretty vague. We know, for example, that they want to nationalize highways. They want to lower prices of electricity by 30 to 40%. They want to lower the retirement age back to 62 or even 60 years old in some cases. That would itself cost as much as 30 billion euros, and a lot of other very costly measures, including, for example, some zero interest loan for first-time home buyers. So all of this, of course, is great in terms of improving the cost of living on paper, but depending on how they're going to finance this, it's very unclear how they're going to finance all these costly measures.
Caroline, thank you so much. Caroline Conan there with the very latest from a pretty tumultuous Paris. Now on to gender, and it could take up to 134 years for the world to close the pay gap between women and men. That's a warning from the World Economic Forum 2024 Global Gender Gap Report. Now let's speak to the WEF's Managing Director, Saadia Zahidi, who of course is always instrumental in doing these reports and giving us the latest news on them. So Saadia, thank you so much, as always, for joining us. 134 years, I mean, that's a lot. And last year it was 131 years. So why are we going backwards?
Yeah, I mean, 5 generations and the year 2158 before we get to parity at the current rates of change. And I think there's a number of things that are leading to this continued stall. One is, up until 2 years ago, we were starting to get sort of a global all-time high of women in leadership positions at about 37.5% in the business world. And that has been declining over the last 2 years as the economy has been slowing down. So essentially, because there's less dynamism in some of those leadership roles and in some parts of the economy, there's fewer women going into those. Now, there is some hope, I think, for this year and next year, and that is because of the changes that are happening in political systems around the world. About 3 billion people are going to some form of local or national election this year and next year. And women in politics is, of course, one of the areas that needs some very significant transformation, where only 22% of that gender gap has been closed.
So, Saadia, is this because actually political representation from women in these elections is higher, or is it because some of the policies put in place could help women?
So I think there's a number of things that are happening. When it comes to local participation, only about 35% of that gender gap has been closed, but that is a lot better than some of the other areas. So women in parliament, all-time high, but only 33%. Women in ministerial positions, nearly the all-time high, but only about 24% of those roles are occupied by women. And when it comes to women in heads of state roles over the last 50 years, that's less than 15% for most of the world. So there's an opportunity here, given the number of countries that are going to elections. But of course, that opportunity is not just over this year and next year, but there has to be some consistent effort to have women in leadership positions. And this mirrors very much what's happening in various industries as well.
Saadia, I know that labor force participation has really gone down for women because of COVID, because they were carers more, because they stayed at home more. How slowly is that recovering?
So there has been a bounce back, nearly 4 percentage points compared to the peak of the low at COVID. And I think some element of this is that there was more of a recognition that care systems matter. And that's there's more economies that are putting some structural changes in place in relation to that. There's another element, which is the overall shakeup that is happening across so many different industries because of the rise of artificial intelligence and what that then means for women and men's participation in the economy, but knowing that more women-dominated roles are being disrupted. So there's more efforts now being put in place when it comes to upskilling and reskilling women, but more, of course, needs to be done. And there's, again, a piece of good news, which is when it comes to AI engineering, which I think we'd all agree is going to be one of the key roles that's not just growing in the future, but shaping the rest of the economy. In that role, there's been a doubling of female talent between 2016 and today. Of course, that's still half when it comes to men, but that is a very positive sign. The pace of change has been very similar to men going into those roles.
And Saadia, again, this is hugely important, right? The fact that you say since 2016, female representation in AI engineering has doubled. But does that help with algorithms? Does it help in boosting female participation in all? Or is it just because job creation will mostly come from AI-related jobs and therefore also AI engineering?
I think it's both. So one is, of course, this is a major growing sector of the economy. And the more first movers there are going into that particular space, the better it is. And of course, it's important that there's more parity built up in that sector simply because that's one of the growing roles. But the second element is the outsized impact that it has on everything else. So how some of those decisions around practices and policies and biases and governance of that data, how all of that looks, if those decisions can be made in a more gender equal way, then the impact that it has on the rest of the economy will also tend to be one that is more gender equal.
Saadia, as always, it's a very well-written report because it's also very clear that you're focusing on four key dimensions: economic participation, opportunity, then educational attainment, health and survival, and political empowerment. What are you, out of those four, most optimistic about?
Yeah, so I think there has been some progress when it comes to economic participation, and there has certainly been progress in learning what works. And that is where care systems, more targeted focus on the STEM sector, more targeted focus inside organizations, recognizing that there's a win-win here, that integrating more gender-balanced teams is going to lead to greater innovation and creativity. The richness of the lessons, I think that can only help. And the transferability of those lessons is quite high between different businesses and different sectors and between different countries as well. So there's a lot to be learned from what we've picked up here over the last 18 years that we've been tracking this particular index, but it still requires a lot more targeted action, both by CEOs and by governments.
Saadia, as always, thank you so much for joining us. Saadia Zahidi, there, Managing Director at the World Economic Forum, with a really important global gender gap report that I urge everyone to read. You can find it online. Now, coming up, the Conservative Party unveils its manifesto. We discuss where it leaves the opposition with Dale Vince, founder of the green energy company Ecotricity and Labour Party donor. That's coming up next, and this is Bloomberg. Well, the UK Prime Minister Rishi Sunak has put tax cuts at the centre of the Conservative election manifesto. Now, that's as he tries to turn his party's fortunes in national polls ahead of the 4th of July general election.
I'm not blind to the fact that people are frustrated with our party and frustrated with me. Things have not always been easy, and we have not got everything right. But we are the only party in this election with the big ideas to make our country a better place to live.
Now, the opposition has called it a, quote, desperate wish list. Labour will unveil its manifesto on Thursday. Joining us now, I'm very excited about this interview, Dale Vince, founder of green energy company Ecotricity. Vince has donated more than £5 million to the UK Labour Party. So, Dale, thank you so much for joining us. I mean, you know, I don't know whether anything can happen, people tell me, in the election, but actually Labour are so far ahead in the polls. I mean, is there any chance that they don't bring this home?
I think that, you know, there's a chance that people see it exactly like that it's a slam dunk and they don't need to go out and vote. I think that's the one danger perhaps facing Labour. I think other than that, the Conservatives' record in office is so terrible. Their campaign so far has been pretty terrible. And the polls are reflecting what people really think in our country. But it is important that people get out and vote.
Okay, so you're a Labour supporter, you're a Labour donor. What do you think they need to do with the net zero policies? So they've kind of rolled back on some of the commitments and their spending plans. Can they go back? How do they kind of navigate and also bring back private investments?
Yeah, I think private investment's never really gone away, except when the Conservatives banned onshore wind, and then private money couldn't go into that. But it's gone into other things. There's no shortage of private money wanting to invest in net zero, because actually it's the most economic form of energy, for example, that we can make from the wind and the sun.
But with a government that says, like, look, I'm going to put an extra 28 billion, I mean, that helps private money kind of match that or come in with more gusto.
It could do, or it could be seen as a competitor. But the thing I always say about onshore wind and solar is it needs no public money. And so this talk about the 28 billion that was rowed back onto, like, it was either between 5 and 12, depending on who you listen to, whatever it was. My point is that we don't need public money to get to 100% green electricity on the grid. Let's use it for something else.
Okay, so you don't think there's no concern that actually there's less commitment from Labour on net zero? You think they're serious about it and you would support their plans on this?
Yeah, I do. I think they're completely serious. I think they get the opportunity of the green economy, and they have this most ambitious plan to be 100% green electricity by 2030, for example. That's not a road back at all. I mean, I think that's very ambitious.
Is there anything that you wish they would do differently or be more clear about?
Not really. I understand where they're at. I mean, until a couple of weeks ago, it was pre-election, and there was a lot of pre-election scrutiny. Now we're in the actual election. I think we'll see more boldness from the manifesto when it comes out. And I think it's just a matter of time now before we see Labour actually starting to do things. Obviously, a couple more weeks, hopefully they'll be in government and we'll see what they've got. And I'm very confident that they really will move heaven and earth to get to net zero and to rebuild our economy, because that's what the green economy, offers us, the chance for jobs and GDP growth.
So, Dale, what do you think the relationship of the Labour government is with businesses right now? We know that Rachel Reeves has gone the rounds. She's charmed a lot of the businesses. She said, look, nothing really changes. There are questions on private equity, on some of the things that they could do on net interest income, the 2%. Like, how do you see that playing out?
I'd see it as quite fine. I think business sees Labour as the next government, as the credible party in the room. The Conservatives have lost that mantle some time ago. I think tax on private equity and stuff like that, I think that's fair, right? We should close tax loopholes. Let's face it, the very richest people among us can afford not to have these tax loopholes. I don't think that will put business off Labour at all.
Do you think they'll stay here, or do you think they'll move abroad? This is always a question. It's like if you want to make it fair, that's great, but the rich may move elsewhere.
Yeah, I'm not really worried what the rich do in terms of being here or being abroad. I think if there's an opportunity here to make business, to make money, then there'll be enough people here to do that, and the opportunities will be here under a Labour government.
But so do you care, for example, what they do about private equity, or does it not really? You're a businessman. I mean, you created, a company that has done very well. What would you need to start a company over now under a Labour government?
Oh, I don't think there's anything different. I mean, we were part of a team that took this current government to court over the private equity tax loophole. So I think it should be closed. I think that business should pay more tax than they do. I think rich people should pay more tax than they do. Excuse me. And that won't disincentivize people to get out and start businesses and make money. It's still a wonderful opportunity, particularly when we have a government that unlocks the potential of green energy. Onshore wind has been banned for over a decade, for example, which is a travesty.
Is there, again, there's a lot of concerns about, what happens to this country in terms of a growth plan, right? Because finances are so tight. What would you do as a blueprint for the UK to grow in the 5 to 10 years to come?
Well, I would invest in green energy, not just electricity, but gas as well. We have a massive opportunity to make the gas we need from grass instead of having a heat pump programme. And I would do as Labour planned to do, get to 100% green electricity as fast as possible. We commissioned a study, and it shows that for every pound we put into fossil fuels, we get twice as many jobs and twice the GDP growth if we put that money into renewable energy. It's a wonderful opportunity. That's what I would do.
What do you think this election is about? Is it about personalities? Is it just that people are fed up with the Tories, or do they actually like Labour policies and the leader?
I think it's always about personalities, and I think absolutely people are fed up with the Tories. They have had 14 years after all, and I think they've shown themselves to be a party now that's run out of ideas and run out of talent, and I think they need a period in opposition to rebuild themselves. I think that happens periodically in English politics, maybe in all politics, I don't know. Are the country in love with Labour's plans? I don't think completely. To be honest, I think, the Conservatives have really kind of lost this election more than Labour currently have won it. But I'm hoping to see some exciting stuff in the manifesto.
So I was talking about excitement, and actually it's a good point, is that I don't know if Labour have it in terms of, does Keir Starmer need to be have more fire in the belly? This is maybe the point that people make the most.
Yeah, it's said about him a lot, isn't it? But I think there's a whole bunch of people in our country that just want a solid leader, somebody reliable that they can depend on, not somebody that's exciting like Boris Johnson, whom you couldn't trust, actually, or somebody like Rishi Sunak, who never really speaks the truth.
Chips are vegan. I need to ask you about chips are vegan. This is literally just because people don't realize that chips are vegan.
Yeah.
And tell me about the T-shirt.
Absolutely, absolutely. Along with a lot of every other day foods. I ran a football club, a vegan football club, and I was doing an interview with our new manager, and the interviewer tried to bowl him a difficult question. Have you eaten any vegan food? And he was like, I don't know. And I said, chips are vegan. And he's like, chips are vegan. So
and the T-shirt's been made. There you go, Dale. Thank you so much for joining us. Dale Vince, founder of green energy company Ecotricity and Labour donor. Now, we'll have much more, of course we will, on the upcoming UK election on our weekly UK show at 9:30 a.m. London time tomorrow. Now, coming up, the EU is set to push ahead with EV tariffs on China despite concerns in Berlin. We discuss the latest from Brussels and what it means for the global auto sector. That's coming up shortly, and this is Bloomberg. Now, the European Commission is due to notify Chinese EV makers of provisional tariffs today. Now, according to European officials, companies could face additional levies of around 25%. That's despite concerns from the German government it could trigger a costly trade war with Beijing. Well, Bloomberg understands that numbers have still not been finalized. The move was widely expected, with EV makers the biggest losers in the Hong Kong session. Let's bring in Bloomberg's global autos editor, Craig Trudell. Craig, always good to have you on TV. This is a moving story. It's a big story, and European governments are definitely divided. So what's the latest from the auto sector? What do they want?
Yeah, there's a lot of potential for this to go sideways. That being said, there's also still questions about, just how much Chinese manufacturers will be able to sustain this blow, to what extent they've been pricing their vehicles sort of strategically to try to avoid this level of scrutiny and maybe have a cushion to work with to bring the starting prices down and still be able to sell competitively even with something like a 25% additional tariff. So there are a lot of question marks here and a lot of moving pieces, but the likelihood or possibility of retaliation for China means that it's kind of a negative story all around, right? It's a blow to the Chinese companies, but also something that, as you mentioned, the Germans are quite worried about.
So does China retaliate? Does China, do they care about the amount that the tariffs are set at, or is it just an affront by just putting something on them?
I think it's an interesting thing because China does have way too much capacity and is sensitive to the idea that Europe is not only a place where a lot of cars are purchased, it's also a place where they can get top dollar for the cars that they export. So I don't think that Beijing wants to overdo it here in terms of retaliation, but we've already seen them, allude to this possibility of maybe that they would retaliate with tariffs on cars with large engines, which would hit German manufacturers that still ship a fair number of cars from Germany into China.
Craig, very quickly, BNEF used to think that EVs were good for the climate. Now there's question marks.
It's really a compelling report today, about 260 pages worth of analysis on the state of the EV market, how much EVs are slowing down, plug-in hybrids sort of picking up some of the slack, and some questions about just how good those are for the climate. But it's absolutely the case that the industry needs to accelerate in order to get us to net zero. And right now, the momentum has really stalled.
Craig, thank you so much, as always, for joining us. Craig Trudell there on autos and EVs. Bloomberg Brief, that's up ahead, and this is Bloomberg.